All right, Ken Orange Theory Trader back with you for a trade review on eurocad. This was for a 5 p.m., 9 p.m., and 1 a.m. trade short. I do like to see where the middle candle or manipulation candle does make the high of the day. Let me see if it did that here. It did indeed. So that can be a telltale sign that price could be continuing down. So again, this was the range candle, the money candle, like that, like I like to call it, or manipulation, and then price moving to the downside. So we would have started trading at 1 a.m. We also like to see price closing near the range high, which is what it did right here. Remember that your safest stop loss is always going to go above the high of the day. Or you can, if you want to have a tighter stop loss, set it slightly outside of the range. So we drop down to our 5-minute chart and see if we see any fair value gaps that show momentum. And sometimes you won't always get them. It's just that when you see fair value gaps near the range high, that can always be a good sign. So you would have been okay to take a trade as soon as the candle opened at 1 a.m., especially with it being so close to the range high. We take that short here. Let me see if we could have got away with a 10 pip stop loss. We could. I'll just leave it at 10. So, and let me see if we could have got a 1 to 5. Yeah, we could have, based on price action here, just barely at 9 a.m. It just tapped it, so that's good. Did break out of the range, so that's good. We did have a tight range on this as well. The range was only 10 pips. So when you get a range that small, the likelihood of a breakout is more possible. Let me put that back up there. Okay, so let me go back out to the 4-hour chart. Let me get rid of the fair value gaps. Okay, but then that's zoomed out here. So again, a tight range can lead to larger moves, large breakouts, and then exit at, like I said, around 9 or so, because price did bounce back when New York session started. So typically, sometimes the earlier you enter, the earlier you'll need to exit. So if you start trading around 1 a.m., you're going to probably want to be out by 8 or 9 or so, because price does and will retrace if it goes down far enough. But this would have been an excellent trade. Very simple. Like I said, guys, it's just the same pattern over and over. Okay, but a tight range can lead to a big move. So just candle 1, candle 2, and then we start trading on candle 3. And just look for the distribution to the downside. And remember, the best confirmation that I see, at least, that I believe, are going to be fair value gaps that hold. And then when the fair value gap, if price ever reaches back into a gap, I don't see where it did here. It either reaches back into a gap and continues in the same direction. It did a little bit right here. Right here where you see this pin, it barely pinned it and then just tanked. That's the type of price action we see. But if this fair value gap gets erased or filled and price closes above it, then you could be on the wrong side of the market. So, but that's it. That was a great trade for eurocad. So, yeah, I mean, that's it. But like I said, look out for those tight ranges. They can lead to some pretty big moves. So I appreciate your time and attention. Thank you so much for watching. Don't forget to subscribe to the channel and have a great rest of your day. Take care.